The exchange rate fell a cent to 104.5, but it's virtually steady against the euro and actually a little higher against the yen. Now, there's a big realignment taking place among the world's currencies because of an awakening of optimism about the American economy. Surveys are pointing to a recovery in manufacturing industry, which is pushing the US dollar higher, especially against the Japanese yen. And that's despite a sharp sell-off in the US bond market in recent days. Yields there have jumped from 2 to 2.4% in a few days because the money is coming out of bonds and into equities. The S&P 500 has gone up nearly 4% in a week, despite a slight correction last night. German and Japanese markets both went up today because their currencies are down against the strong US dollar, making their exporters more profitable. The sell-off in US bonds has spread to Australia, where the bond yield here has also jumped sharply in the past few days. Some experts are calling the start of a bond bear market, and you have to say that yields in the US and here have come down so much, and that's the reverse of rising prices, that there must be a correction at some point. It's not that important here, but in America, mortgage rates are set to long-term bond yields. Australian shares also took a backward step today after a strong few days. Myer shares dropped more than 3% after the company reported a 17.5% decline in first half profit. BHP and Newcrest lost ground, but Fortescue jumped 2.5% because it raised $2 billion in bonds. And finally, a note on Australia's declining productivity. It's all in the mining sector, and that's only because there's a massive investment boom going on. Productivity in other industries is improving, and that's finance.